Welcome to Earnings Central. In this video, we'll break down Kyndryl Holdings' third quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q3 was $3.81 billion. The company actually reported revenue of $3.74 billion, missing expectations by 1.8%. This quarterly revenue also marked a 5.1% decrease compared to the $3.94 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q3 was 41 cents. The company actually reported an EPS of 51 cents, crushing expectations by 24.4%. This result also reflects a major 56-cent improvement compared to the loss of 5 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Kyndryl delivered impressive signings growth, reaching $16.3 billion over the last 12 months. That's a 31% increase year over year. This marks their fifth consecutive quarter of signings growth, showing strong momentum in winning new business and expanding existing relationships. The company achieved a record-breaking adjusted EBITDA margin of 18.8%, demonstrating their ability to improve profitability while transforming the business. This was up 320 basis points compared to the same quarter last year, reflecting successful execution of their strategy to focus on higher-value services. On the cash flow front, Kyndryl generated $171 million in adjusted free cash flow during the quarter, highlighting their ability to convert earnings into cash. This strong cash generation supports their investment plans and shareholder returns, including their newly launched share buyback program, under which they spent $30 million in the quarter. The company's Hyperscaler-related revenue exceeded $300 million in Q3, putting them on track to surpass their $1 billion annual target. This represents significant growth in their cloud partnerships and shows how Kyndryl is successfully diversifying beyond their traditional business. A standout performer was Kyndryl Consult, their advisory services division, which saw impressive revenue growth of 26% year over year. Consult now represents over 20% of total revenue, up from just 10% at the time of the company's spinoff, showing successful execution in growing higher-margin services. Now, let's shift focus to some of the key insights and takeaways from the earnings call. First, artificial intelligence is emerging as a major driver of customer demand. Kyndryl is helping clients establish the right foundation for AI implementation, including data architecture, security, and governance frameworks. They're also seeing increased demand for both traditional AI and generative AI services across multiple sectors. An important takeaway is that Kyndryl's core mission-critical services remain non-discretionary for their clients. In today's digital world, modernizing IT systems isn't optional. It's essential for business survival and growth. This provides Kyndryl with stability even in uncertain economic conditions. The company is seeing particularly strong growth in security and cloud services, reflecting broader industry trends toward digital transformation and enhanced cybersecurity measures. Their ability to provide multi-vendor solutions and objective recommendations is resonating strongly with clients. Customer retention remains exceptionally strong, staying above 90% for the past 3 years. This high retention rate, combined with the addition of over 300 new customers during that period, demonstrates the value Kyndryl provides to its clients and their satisfaction with the company's services. The Kyndryl Bridge platform, their AI-enabled operating platform, continues to deliver significant results. It's helping drive automation, optimize operations, and provide valuable insights to customers. The platform has helped free up more than 12,300 delivery professionals to address new revenue opportunities, representing about $725 million in annual value. Finally, the company's strategic focus on higher-margin advisory services is paying off. They're seeing strong demand for modernization, cloud migration, and security consulting services, with Consult signings growing even faster than revenue at 35% year over year. These results and insights paint a picture of a company successfully executing its transformation strategy, growing in key areas, and positioning itself for sustainable profitable growth. With their focus on mission-critical services, expanding capabilities in AI and cloud, and growing higher-margin consulting business, Kyndryl appears well-positioned for continued success in the evolving technology services landscape. That wraps up our recap of Kyndryl Holdings' third quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.